It's market update time again, and in today's episode of the Brisbane Property Podcast, we are going to be discussing how the house market and the unit market have been performing throughout the month of May and how Brisbane house and unit prices compare to other capital city markets around Australia. We hope you enjoy this episode.
Welcome to the Brisbane Property Podcast with your hosts Melinda and Scott Jennison.
Hello, everyone, and welcome back to another episode of the Brisbane Property Podcast with Scott and Melinda Jennison. And it's market update time.
It is market update time, and we've got all of the latest data for CoreLogic and PropTrack, as well as some SQM research information thrown in there as well, up to the end of May 2024. And there's been a little bit of a changing of the guards in terms of what's happening at a national level, which we'll obviously get through today. So yes, once again, lots of research has been put into this episode. So we really hope you enjoy this market update.
And just before we do jump into the market update, obviously some news that probably not all our listeners have heard, but I do want to say big congratulations. Recently, we attended the PIPA Awards, which is the Property Investment Professionals of Australia, the awards. And I have to do a big shout out to Melinda, who was the Buyer's Agent of the Year, and also the Property Investment Advisor of the Year, and also Briley in our team, who is the Graduate of the Year and also the QPIA of the Year. So big shout out to Melinda and Briley in our team, and congratulations.
Thank you for that shout out, Scott. And for people that don't understand what the acronym of QPIA actually stands for, it's those who are qualified property investment advisors. They're certified through the Property Investment Professionals of Australia. And as we have pointed out previously, within our team, 3 of our team members are already qualified property investment advisors. And we've got a 4th team member, Andy, currently studying to become a qualified property investment advisor. So the Property Investment Professionals of Australia Awards for Excellence, or the PIPA Awards, were conducted for businesses and individuals all across Australia who carry this qualification in order to provide investment advice to their clients. And we are really proud, in fact, quite humbled to have taken away 4 of the 9 awards across the evening. So obviously, we're very thankful for the clients who have entrusted us over the years, and we're very proud of these achievements and to be recognised amongst some really strong candidates who were finalists amongst us. So it was great to go down there and celebrate with the team, and wonderful that our luggage was so much heavier coming home because of the awards that we took home as well.
Definitely. So market update. Brisbane. We've seen Brisbane jump into the second highest median values amongst the capital Australia's cities in Australia.
That's right. That is in relation to dwelling values. So you would have seen this perhaps already over the news headlines. Now, earlier in the year, you will have seen that Brisbane dwelling values overtook Melbourne. Now, Brisbane dwelling values have also overtaken Canberra. So again, dwelling values references both the combined value of units and townhouses. And at that median dwelling value level, Brisbane's now sitting in second place, according to CoreLogic, and equal second place according to PropTrack data. So that's been a significant shift, especially in the last 6 months.
And what do you think's contributed? I mean, is it the low listing numbers that are obviously pushing prices, pressure on prices as well?
Absolutely. It's definitely one of the contributing factors here in Brisbane. And in fact, as we dissect the national property market, we can see that the 3 capital cities that are outperforming all other locations, being Brisbane, Adelaide and Perth, these capital cities are all aligned in that they all have a restriction of supply or very low listing volumes right now at a time where demand is heightened or quite strong. And it's that mismatch between the buyer demand and the availability of stock or the supply that is causing those prices to rise. But what's happening in the unit market and the housing market in Brisbane is a little bit, there's a little bit of difference there in that the unit market is still performing much stronger than the housing market. And when we look at, how Brisbane units are comparing with other capital city markets and how Brisbane houses are comparing with other capital city markets, obviously there's a change in the rankings in some of those areas as well, which we will get to when we discuss the house market and the unit market separately.
So when we're talking about those listings, the reduction in total listing volumes is down 34.1% compared to the previous 5-year average, according to CoreLogic.
That is absolutely correct. So for anyone that has studied the number of listings available here in Brisbane, you may realise if you're looking at SQM research data that year on year, it's fairly similar in terms of the total amount of stock available. However, when we're looking at the monthly change, there's been a little bit of an uptick between April and May. So that's actually encouraging. But still, that long-term trend is anywhere between 30 to 40% down on where we usually sit. So it is a tough environment for buyers here in Brisbane who are looking to purchase because there's such a limitation of stock. And that's causing those buyers to become more concentrated, especially on quality properties when they become available.
So buyer activity then. So obviously we're talking about low listings down, buyer activity that's increased.
Buyer activity has increased. And in fact, when we look at sales volumes, this can be an indication of buyer activity. Sales volumes over the last 12 months have increased 7% here in Brisbane, according to CoreLogic. And that's an indication of that strong buyer activity that is occurring. But of course, on the ground, we witness that buyer activity in real time. When we turn up to open homes, especially for quality units and townhouses, even more so than houses right now here in Brisbane, we are lining up to get into some of these properties. A couple of weeks ago, I attended a townhouse inspection in Morningside, and I had to wait about 20 minutes just to get in the front door. By the time I'd finished that inspection and walked back out, the lineup was just as long as when I had commenced my wait. So, in that half an hour inspection time frame, there would have been in excess of 70 or 80 groups through a single property. That is an indication of demand that can exist on some properties here in Brisbane. However, we can turn up to other open homes and you can walk straight in. So it's very localised. It's also very property specific, but the buyers are there when the quality properties become available. So that's just something that's important for any buyer that's in the market to understand. But also, if you are a seller, preparing your property for sale so that it appeals to that volume of buyers that obviously do exist in the market absolutely makes sense in this market at the moment.
Now, it's interesting as we're about to jump into the numbers and the changes in the market. I know that we talked about, and this is May, obviously the data we're reporting on now, and we did talk about in the last market update, the April one, we said this might have had a bit of an impact through school holidays, Easter, those types of things. And we did talk about watch next month and actually see what happens. At that stage, we weren't sure whether the market was going to slow down a bit. It seemed like it was just settling. But obviously when we go into the numbers now, we start to look at Brisbane, it seems to be accelerating again.
It does, and that is evident both in the unit market and the housing market here in Brisbane. So you may recall last month we were talking about the fact that the house market in Brisbane had started to slow down or decelerate in terms of its rate of growth. Still positive month on month, but the gains each month were starting to decrease. That's turned around this month, as we'll get to when we talk about the monthly data. And we've seen a re-acceleration in price growth for both houses and units across the city, and that's lifted the dwelling values as a whole back into an accelerated growth mode as well.
So auction clearance rates through Brisbane, we've seen the clearance rates remain steady at around 63.9% in April.
Yeah, that's right. Now, obviously, that's going to be an indication of those sellers that have met the market on auction day, because from the information supplied by Apollo Auctions, we can also see that there's been an increase in the number of registered bidders. On average, in April, there were 3.1 registered bidders per auction, but on average in May, that increased to 3.5 registered bidders per auction. So that is still sitting above the long-term average, which sits somewhere between 2 and 2.5 people per auction. So I will also say that the number of registered bidders who actually raised their paddle, again, according to CoreLogic data, that sat at 62%, which is fairly consistent between April and May, which indicates that the active participants at auction, regardless of the fact that there were more registered throughout May compared to April, that the volume of active bidders remained fairly constant.
So dwellings, let's jump into some dwelling values in Brisbane, and we've seen an increase of 1.4%.
That's right. So according to CoreLogic, Brisbane dwelling values increased 1.4% across the month of May. So a dwelling in Greater Brisbane now at a median value level sits at 843,231. That is not the amount you'll need to buy the average house. That is all dwellings, and that's important. That we'll get to the house market and the unit market separately later. But quarterly, the dwelling values now have shifted 3.9% across all of Brisbane, and annually that change has been 16.3%, second only behind Perth in terms of that annual growth in dwellings across all of Greater Brisbane.
And if we're looking then at, I know we break down the dwellings and the units, but obviously the segments, and this is something we always do talk about, and it was strong previously in that bottom section of the market, and that's actually maintained that way as well.
Yeah, that's right. So this trend is similar across all capital city markets throughout Australia. Brisbane has, again, witnessed slower growth in the upper quartile dwelling values over the last 3 months and stronger growth in the lower quartile values. That is the lowest 25% of property values. Now, we have previously explained that there's some compositional bias within this information. So stronger performance is occurring in the more affordable segments of the market, so lower priced houses, but also we cannot forget the influence that the unit and townhouse market is having towards the higher growth in the lower segment of the dwellings value market, because the unit market here in Brisbane is significantly outperforming the house market. So looking at price point alone, it's definitely the lower segment of the market that's outperforming the top segment of the market based on dwellings data.
Maybe that's based a little bit on that affordability side of things for people.
100%.
So we did jump across, obviously, when we're talking about dwellings, obviously PropTrack, and we do like to report both on, as Melinda mentioned earlier, CoreLogic and PropTrack data. PropTrack saw an increase in dwellings in Greater Brisbane of 0.67%, with annual growth of 13.69%.
Yeah, so PropTrack data also puts Brisbane at its peak growth in the market right now. PropTrack has also reported that Brisbane dwelling values have increased 68% since the onset of COVID back in March 2020. That is a significant shift in values. Adelaide just ahead at 60.5%. And
68.5.
68.5. Thank you for correcting me. Just behind Perth, and this is despite the more recent elevation in growth in Perth. Over the last several years since March 2020, Perth has shifted 64.3%. Now, the reason I've pointed out these three markets is, as you will have recalled earlier, I mentioned these three markets are the markets where the total volume of listings is significantly lower than the long-term average. And these are the markets that are currently performing at a higher rate month on month in terms of capital growth or the change in median dwelling values. And this is simply because of low supply and high demand. Now, I want you to compare this growth of 64.3% in Perth, 68% in Brisbane, and 68.5% in Adelaide with some of the other capital city markets since the onset of COVID. So Sydney has shifted 37%, Melbourne 17.5%, Hobart 34.9%, Darwin 27.4%, and the Australian Capital Territory, or ACT, 36.9%. So Brisbane, Adelaide, and Perth have seen significant outperformance since the onset of COVID. And of course, these markets were the more affordable markets at that time, but it's also a story of supply and demand, because ultimately that's what determines price pressure.
So and it's interesting when you look at the change, as you said, since March 2020, and then if we move to house prices now, so obviously in the last month in Brisbane, and I know this became a bit of it seemed like a bit of a habit, we seem to repeat ourselves. I think when we did our year in review, must have been at the start of this year, when we talked about last year and what had happened from about March, April last year, and it felt like consistently month on month, it was 1.4%. So housing prices, the median house price in Brisbane, wouldn't surprise if I said 1.4%.
That's right. Now, that is the growth that was experienced in the Brisbane market throughout May, according to CoreLogic data. Now, compare that to the April data, where Brisbane house prices shifted 0.9%. So there's been a significant reacceleration in that rate of growth. Quarterly growth also at the end of April was sitting at 3.1%. Now at the end of May, it's sitting at 3.7%. So we've seen a reacceleration again on a quarter by quarter basis in the house market here in Brisbane. I will say annually, the house market in Brisbane maintains its position as the second fastest capital city market in Australia. Again, that is behind Perth. So for those that are wondering, the median house price here in Greater Brisbane now sits at $937,479. Now, that has edged ever so slightly ahead of Melbourne, according to the CoreLogic data. Melbourne sitting at $937,289. So it means that Brisbane has now just exceeded the median house price of Melbourne, and it places Brisbane in third place amongst the most expensive capital city markets for houses here in Australia. Brisbane now sits behind Canberra, which has a median value of $961,403, and Sydney, which has a much higher median house value of $1,441,957.
So that median price, and we do like to do this as well for our listeners, just to break that down into a number. And if you look at that, that's an increase on that median price. That's an increase of $17,433 from last month and $27,491 in the last 3 months.
It's a lot of money. And even if we extrapolate that over the last 12 months in terms of the annual growth for house prices here in Brisbane at a median value level, we've seen a shift of $129,307. So that is a significant shift. If you've been in the market for 12 months looking for a house, it is likely that you'll be very frustrated knowing that the market has really shifted in a significant way in that time. And of course, that's one of the benefits of those who partner with a buyer's agent, because if we can get you into the market much sooner, there's that opportunity cost that you will be saving because we'll simply avoid that continuous market shift by being out of the market.
And reporting on PropTrack data, again, median house price there, $930,000. So pretty similar to what CoreLogic has got. And they've had an increase of 0.64% in the month.
That's right. And also showing annual growth of 13.34% in Brisbane for house prices across the last 12 months.
And one of the big performers, units. We've said this, it seems, again, feels like we're repeating ourselves a little bit, but the unit market has been strong, as Melinda mentioned earlier in the podcast. You can go, if you go to the right locations, and we do seem to see this a lot because we seem to be going to the right locations, and you're looking at a unit, generally there's a lineup and there's people waiting to get in there. There's shoes out the front, quite often goes to multi-offer, and the unit market has definitely performed well and continues to, as it's gone up again another 1.9% according to CoreLogic data.
And that's just in a 4-week period, the month of May. And this follows an increase of 1.5% in April. So quarterly growth in the unit segment of the market here in Brisbane now sits at 5.3%, and annual growth in the unit market sits at 18.2%. So the unit market here in Brisbane now still performing or outperforming the housing market on a monthly, quarterly, and an annual basis. Now, this is quite unprecedented when we compare historically the unit market to the house market. The house market has been the outperformer here in Brisbane, but it's certainly been a turning of the tides in the last 2 to 2.5 years as people have really adopted different ways of living. But more so than that, I think there's been a focus on more affordable housing options, and that is why people are looking to units and townhouses in locations which are closer to their lifestyle precincts, and it's potentially a trend that we'll continue to see in the future.
Yeah, and then if you look at the unit values on that increase over the median level, that's $15,214 in the month. And in the last quarter, $27,636. And as you mentioned with the houses, annually, $94,761. And
just for some context, because I think we failed to mention it right now, the median value for a unit in Greater Brisbane sits at $615,429. Now, that puts Brisbane, or it elevates Brisbane's ranking in terms of the median unit values for capital city markets. Brisbane's median unit value has now surpassed Melbourne's. So you'll recall Brisbane's sitting at 615,429 for a median unit value. Melbourne's median unit value is 614,299. So Brisbane units are now more expensive at a median value level than Melbourne's. Also, Brisbane's ahead of Canberra. So the median value for a unit in Canberra sits at $583,587. So Brisbane right now is the second most expensive capital city market within Australia for units, behind Sydney, which is the most expensive unit market in Australia. So there's been some big shifts recently in both the house market and the unit market here in Brisbane, and a lot of that has occurred throughout the month of May.
So median price 615,429.
Yeah.
We look at prop track data. We've seen an increase there of 0.86%, and that takes the median price, according to prop track, of $632,000.
That's right. So both data sets providing for the same trends month on month and on an annual basis, which is not unexpected.
Now, I don't want to sound like a broken record, but the rental market vacancy rates very, very tight, sitting at 1% citywide.
Yeah, critically low. Not much change really throughout the first 6 months of 2024, to be honest. I mean, there's some regions in Brisbane where vacancy rates are sitting at less than 0.5%. And we see anecdotally when properties that we purchase for our investment clients are put up to rent, usually those landlords have a number of options to consider because of multiple applications from tenants. It's really tough out there to find a quality investment, or rather a quality rental property if you are a tenant. So, it's not surprising that that rents are continuing to increase simply because of a lack of stock and those low vacancy rates. So if we look at the annual change in rents for houses here in Brisbane, house rents have increased 8.2% across the last 12 months up to the end of May. Now, that actually has increased slightly from the end of April. So the annual figure at the end of April was 7.9%. So again, we're seeing a re-acceleration in the rate of rental price growth in housing here in Brisbane. And it's simply because there's very little stock and there's very high demand from tenants. When we look at the unit market here in Brisbane, the annual rate of growth for a rent in units here in Brisbane sits at 9.6%. So for those that are renting units, those tenants renting units, that rate of growth annually is starting to come down. So last month that was at 10.5% growth in rents in the unit market. So it's shifting backward, which is reassuring for those tenants that are in the market to rent. So there's definitely been an uptick in rent growth rates in the housing market, but we're starting to see an easing in the unit market here in Brisbane. That said, the annual rate of growth is still stronger in the unit market.
So gross yields then for Greater Brisbane currently sits at 3.6%, unchanged from last month for housing. And then for units, a slight decrease slightly from 5% to 4.9%.
That's right. So again, people that are looking for that income play here in Brisbane, those yields are being compressed because the capital value of those assets is increasing. Even though we're still getting strong rental price growth, we're seeing that really strong annual capital growth or median value shift that's causing those yields to compress slightly. So still those yields are much stronger than other major East Coast capital cities here in Brisbane. And it is a reason why a lot of investors do look to Brisbane and Southeast Queensland as a whole for their investment property needs, because not only are there those capital growth opportunities, but there's also those strong rental yields compared to other East Coast capitals.
Now, we'll jump into a summary shortly, but I do want to obviously do a quick shout out as well. It's always lovely to talk to people that do listen to our podcast, especially clients of ours. So I do want to say a quick hello to Eric, who is a client of ours, Kurt and Lawrence, and also someone who I just spoke to the other day who I believe is looking to join up with us and get our services, and that was David and Kylie. So Kaylee, I think it is, sorry. So yeah, big shout out. It's always lovely to talk to people, and I'm glad that people that we do talk to really get a lot of information that we share, and a lot of education, I guess, through the property market for in Brisbane here as well. So a bit of a summary, Melinda, when you look at this market, I think it's, as I said earlier, to me, I felt like it was a bit of rinse and repeat in a way. We seem to be going up in values. Rents still staying very, very strong, low vacancy rates, and a lot of buyers out there looking for property.
Yeah, look, I think that the current environment where interest rates have been fairly stable for some time now, it's actually causing a level of confidence in both buyers and sellers. People are feeling a little bit more confident to transact. I think the main issue with the sellers here in Brisbane is that there's very little to buy. And remember, most people that are looking to sell a property, generally they're looking to buy another property. And I certainly know through conversations we've been having with sales agents and also properties that we've been considering off market sometimes for clients, there's a real urgency to buy before you sell. And if there's nothing to buy, there's a reluctance to sell simply because there's also a gap in the market whereby if people do sell and they need to rent, there's also nothing to rent. So there's really, a little bit of a vicious cycle in terms of the supply pipeline for properties. I will say we have seen a slight easing in the rate of population growth as a whole, which is good because the more people that relocate to a certain area, the more housing that people need. And that puts pressure on the rental market, but it also puts pressure on the purchases or the sales market in a particular city. And it can cause affordability to worsen simply because you've actually got more buyers competing for, the limited amount of stock, and that's what's causing those prices to escalate. So I think right now we're going to continue to see that imbalance between supply or the number of properties that are available for sale and the demand from buyers for those properties. And because of that imbalance, we will only see prices continue to rise. And I know for the last couple of months, I've said they cannot continue to rise at the rate that we've seen, especially throughout 2023. But with this reacceleration that we've seen throughout May, it's going to be interesting to see what unfolds in the months ahead, because there's certainly some sections of the market and some areas where we're seeing such strong buyer demand that we know that we're going to see some strong numbers coming through in the future as well.
And with the unit market, as we've talked about, it consistently has performed and is still performing very, very well. Construction side of things, there's not a lot coming to the market. That side of the supply side of it is still very, very tight. And I think we'll be undersupplied probably for the next few years.
Yeah, when we look at supply, obviously short-term supply can be measured in listing volumes or the number of properties available for sale, but long-term supply can be measured in building approvals or building commencements and what the pipeline of new properties that are being built is looking like. And I will say back in 2023, just last year, Brisbane saw the completion of 2,200 apartments. And so that was a decrease of 70% compared to the previous 12 months and significantly below long-term trends. So that's quite alarming given that heightened demand. And it's no wonder that we've seen this boom in the unit segment of the market when the demand is just, outstripping supply by so many buyers. Also, I'll say, projections at the moment indicate that completions for attached dwellings, again, this is units and townhouses, over the next 12 months are projected to be around 3,100 apartments, which are currently under constructed, and they're due to be completed this year. But due to the recent low level of commencements, apartment completions are forecasted to decline yet again in 2025 back to around 1,200 apartments. So that is well below where current demand sits. And that's why we're going to continue to see that price escalation in this segment of the market, because we're not building enough to keep up with the demand that we're seeing out there.
Plenty of infrastructure still happening in Brisbane. Obviously, when we decisions get made in the government side of things for the Olympics, that will be exciting when things move ahead on that side. But yeah, look, I think it's a very, very strong market. Affordability, that's keeping that unit sector in play as well.
And look, I think all of these shortages in new supply, they're being driven by a number of things. There's a lack of developable land, and there's a lack of infrastructure to get land developed, and that's going to limit new house builds in sort of outer areas of Brisbane in the foreseeable future. There's such high taxes on new builds that is it can prevent future supply from coming faster. We've got sluggish approval processes. It's really hard to get, development approvals through and then building approvals through, and it takes time and it costs developers money. There's workforce shortages. Interest rates are higher. Consequently, the new supply pipeline for any types of dwellings here in Brisbane and Southeast Queensland as a whole, it's delayed. We're not going to see any significant shift in what's available now. And because listing volumes are so low, unless we see some trigger that causes more people to want to sell, we're going to have this imbalance for some time yet. So, if you are in the market and you are looking to buy, my advice is get your finance ready and get into the market as soon as possible, because we're not going to see any significant shift in supply, which means we're only going to see those upward pressures on prices continue unless there's something that causes instability in the market or causes people to sell or causes that demand to drop off for whatever known reason that could be.
Yeah, I know when we talk about that lack of supply, it all sounds a little bit doom and gloom sort of side of things. If you've, as Melinda said, if you can invest and you can get into the market, now seems like a great time. That there is a shortage of properties. You'll get a tenant, and Brisbane's got great growth ahead of it. I think good forecast as well. So, and it's beautiful weather. We're in winter and it's freezing cold. It's like 20 odd degrees in the day. So, just want to rub that one in a little bit at the end of it as well. So, look, it's been great talking. Hope you've enjoyed this market update. As usual, we bring it every month to our listeners, and it's been it's been enjoyable to talk to everyone again. Until next week. Take care, and from myself, bye for now.
Yes, thank you for joining us once again on the Brisbane Property Podcast. As always, we hope you have enjoyed this episode. Please share with friends and family. Leave us a review. Tell us what you like about the podcast or some ideas for future episodes. We always love hearing from our listeners. As always, we hope you have a fantastic week, and we look forward to speaking with you again soon. Bye for now.